Good morning, dear student. I'm Kunal Kiran from the Millennium School, Lucknow. Student, we have been discussing journal, learning how to journalize business transaction in the books of account. We have also learned two methods of journalizing transaction. Yesterday, I have discussed one of the important point while you are recording the transaction. Keep in your mind that is what are the transaction in which GST will not charge. So I recapitulate that point today itself before I start with my class today. So there are transaction related to introduction of amount by the owner or amount withdrawn by the proprietor for personal use, GST will not be charged. Amount deposited and withdrawn from the bank, no GST will be charged. Amount paid to creditors and discount received, amount received from debtors and discount allowed, bad debts written off and bad debts recovered, payment of wages and salaries, electricity and water bill, and payment of traveling expenses. These are the items, these are the transactions in which GST will not charge. Apart from this, I would like to recapitulate rule of debit and credit under modern rule. Under modern rule, for asset, if it increases, it should be debited, decreases, it should be credited. Liability, decreases, should be debited, increases, should be credited. Capital, decreases, debit, increases, credit. Expenses, increases, debit, decreases, credit. Revenue, decreases, debit, increases, credit. Now today I would like to solve one more comprehensive problem, and again this is based on the intra-state transaction, that is all the transactions take place within the state. So SGST and CGST will be involved. So the question says, record the following transactions in the books of Ravi and Company, Lucknow, assuming all transactions have been entered within the state of Uttar Pradesh, charging CGST and SGST at 6% each. The first transaction, started business with cash 50,000 and check of rupees 4 lakh. So after analyzing this transaction, we got to know that there are three accounts are involved: cash account, bank account, and capital. Cash, for cash, it is an asset, it is increasing in the business, so it should be debited. Bank, it is also an asset under modern rule, it is increasing in the business, so it should be debited. Capital, it is increasing in the business, so it should be credited. So the journal entry for the first transaction is cash account debited with 50,000, bank account debited with 4 lakh, to capital account 4 lakh 50,000, being capital introduced in the business or amount introduced in the business. Now second transaction, this one, bought goods of the list price of rupees 1 lakh from Gopal Brothers, less 20% trade discount and 5% cash discount on purchase price. 60% of the amount was paid immediately by check. So if you analyze this transaction, you get to know that this transaction involves both credit as well as cash transaction. 60% payment we have made, so 60% transaction is a cash transaction, that is cash purchase, and 40% is a credit transaction, that is credit purchase. So we will consider this point and we will pass the journal entry. For explanation, I have given you, first of all, we will calculate the amount. List price is given 1 lakh. We will deduct the trade discount 20%, that is 20% of the 1 lakh is 20,000. After deducting 20,000, the remaining amount balance is 80,000. This is my purchase price. So purchase price is 80,000. We will add GST. GST, CGST and SGST will be charged 6% each. So 6% of the 80,000 is 4,800 CGST as well as SGST 4,800. So sum total of these three amounts is 89,600. This is the total amount we have to pay to the Gopal and Brothers, who is the supplier. So out of this 89,600, 60% amount has been paid through check and 40% remain unpaid, that is credit purchase, credit transaction. So first of all, we will calculate actual amount we have paid. That is, so 60% of the 89,600 is 53,760, and on this amount we will receive we have received discount. So 5% of the 60% of the 80 per thousand, 60% of the purchase price is we will calculate, then 5% of that amount we will pay, we will get the discount. So that calculation I have shown here, 5 upon 100 multiplied by 80,000 multiplied by 60 upon 100. So this amount we have calculated, that is 2,400. We will deduct from the amount 53,760, and the remaining amount 51,360 will be paid through check. So this is the paid amount, and 40% unpaid, 40% of the 89,600 is 35,840. So moving forward, purchase account is involved, cash is involved, discount received is involved, Gopal is involved, input CGST and SGST is involved. So it was paid through check. I think it was paid through check. Yes. So cash is not involved, bank is involved. So instead of cash, it is bank. Right. So purchase account is involved. We are purchasing goods. It's expenses for the business. It is increasing, so it should be debited. Bank account is involved. It is an asset. It is decreasing. We are making payment. It is decreasing in the business, so it should be credited. Discount received, it is an income, increase in income, should be credited, so it should be credited. Gopal Brothers, Gopal brother is our creditor, it's a liability, we haven't paid him 40% amount, so increase in liability should be credited. Input CGST and input SGST at the time of purchase, it is treated as an asset. It is increasing in the business, so it should be debited. So the compound journal entry will be purchase account debited with 80,000. Input CGST is 4,800. Input SGST 4,800. To bank, that is the amount paid through check 51,360, and discount received is 2,400. To Gopal Brothers, that is 35,800. This is all about the compound entry, and we will write the narration being goods purchased at 20% trade discount and 5% cash discount, 60% of the amount paid immediately. Now next transaction is sold goods to Manoj and Company of the list price of 2 lakh less 15% trade discount and 4% cash discount on sale price, and received 40% by check. Again, this is mix of credit and cash transaction. Let us see. First of all, we will calculate it. Calculation I have shown here. List price is 2 lakh. Less trade discount 15%, that is 30,000. 15% of the 2 lakh is 30,000. After deducting this 30,000, the balance remain 1,70,000. It is a selling price. In this selling price, we will add the GST. that is 6% CGST and 6% SGST. 6% of the 1,70,000 is 10,200. We will add it. So sum total of these three amounts are 1,90,400. This is the amount we are going to receive from Manoj and company. Out of this amount, Manoj has paid 40%. 40% amount we have received from the Manoj and company. 60% not received, that is credit sale, credit transaction. So we will show, I have shown the calculation. 40% of the cash transaction, 40% is cash transaction. This is 40% of the 1,90,400, that is 76,160, less cash discount allowed to him, 4% of 40% of the purchase selling price. First we calculate 40% of the selling price. 40,000, 40 upon 100 multiplied by 1,70,000 multiplied by 4 by 100. The calculation I have shown here, and that is the calculated amount is 2720. This is the discount we have allowed to Manoj and company. After deducting this amount, the amount comes 73,440. This is the actual amount we have received from Manoj and company through check, and this is the amount we have not received, we will receive in future. So 60% of the 1,90,400, that is 1,14,240. Now, after analysis of the transaction, we get to know what are the accounts are involved in this transaction. Sales account is involved, discount allowed is involved, Manoj and company is involved, bank is involved, output CGST and SGST is involved. So sales, it is an income for the business and it is increasing, it should be debited. Discount allowed, it is an expense or loss for the business and it is increasing because we are allowing discount to the customer, so it's a increase in expenses, it should be debited. Manoj and company, Manoj is a customer, it's a debtor for us and debtor for the 60% amount which we haven't received from him. So debtors are asset for the business, they are increasing in the business right now, so it should be debited. Bank, it is an asset, we are receiving a check from the Manoj and company, so asset is, bank balance is increasing, asset is increasing, it should be debited. Output CGST and output SGST are the liability because this amount what we are collecting from Manoj and company, that will be submitted to the government, so increase in liability should be credited. So the journal entry will be this one. Date is not given, so you will write the number of the transaction in the date column. So bank account debited, the amount we have received, the check 73,440, discount allowed 272, discount allowed is 2720, that should be debited. And Manoj and company, he is a debtor, he should be debited with 1,14,240. Two sales, the actual income from the revenue for the business is 1,70,000, and output CGST and SGST is a liability that has been credited 10,200. So goods sold at 15% trade discount and 4% cash discount, 40% amount received through check. Now next transaction is fourth one. Paid to Gauri Shankar 95,000 by check after deducting 5% cash discount. Right. So this is Gauri Shankar. Gauri Shankar is involved. Check it. We are receiving payment paid through check. So bank is involved, discount received is involved, three accounts are involved. Gauri Shankar was our creditor, right now we are making payment to him, so liability, creditors are liability for the business, right now we are making payment to the Gauri Shankar, so liability is decreasing, it should be debited. Bank balance is decreasing because we are making payment, it is an asset, asset is decreasing, so it should be credited. Discount received is an income and it is increasing in the business, so it should be credited. So the journal entry will be passed: Gauri Shankar account debit with 1 lakh, to bank 95,000, and discount received is 5,000. I have also shown how we will calculate the amount uh, payable to the Gauri Shankar. In the question, it was said 95,000 we have paid after deducting 5% discount. So 95,000 is a 95%. So we will divide 95,000 by 95 multiplied by 100. We got to know the total amount to be paid to the Gauri Shankar, that is 1 lakh, and 5% discount, that is 5,000. So that has been considered here, and Gauri Shankar account will be debited with 1 lakh, to bank 95,000, and discount received 5,000. Again, you can also analyze it. We haven't charged GST, as we have discussed in the beginning of this class, that some of the transaction in which GST will not be considered or will not be charged. Like right now we are making payment to the creditor and discount received. Now next transaction, I'm taking it fifth one: paid electricity expenses paid by check for office 20,000, and for residence of proprietor, that is 10,000. So if you analyze this transaction, you got to know the accounts involved. Electricity expenses is involved, and because we are also businesses making payment of electricity bill of the residence of the proprietor, that is, if you are making payment of owner's personal expenses, they are treated as a drawing. So three accounts are involved. Electricity expenses, drawings, and bank, because we are making payment through check. So electricity is an expense, it is increasing in the business, so it should be debited. Drawings is decrease in capital should be debited. And bank, it is an asset which is decreasing, and so it should be credited. So journal entry will be electricity expenses debited with 20,000, drawings account debited with 10,000, to bank 30,000. So electricity bill paid for office and residence of the proprietor. This is one of the transaction in which GST will not be charged. We have discussed in the beginning of our class. Electricity expenses, traveling expenses, where water bill, as apart from this, wages and salary, we will not charge GST. Now again, the next transaction is paid salary by check 25,000. Again, this transaction, salary related to salary, and for salary GST will not be charged. So salary and bank is involved. Salary account and bank is involved. Salary is a expenses, so it should be, and it is increasing in the business, so it should be debited. Bank, right now it is an bank is an asset, and it is decreasing because we are making payment through check, so it should be credited. So the journal entry will be salary account debited 20,000, to bank salary paid. Next transaction is Dinanath, a debtor for rupees 40,000, has become bankrupt, and 25% is received from his estate by check. So Dinanath was our debtor with 40,000. We are supposed to receive 40,000 from him, but he become bankrupt. Bankrupt means when the debtor is not capable to make payment of his debt. So he become bankrupt, and only 25% has been recovered from his private estate, and that is received through check. So Dinanath, 40,000 was supposed to be received from him. Only 25% we are receiving. 25% of the 40,000 is 10,000, and 75%, which is not received, unpaid from him. So 30,000 become irrecoverable. So irrecoverable is bad debt. So what are the accounts are involved? Dinanath, bank account, and bad debts. Dinanath is a debtor, so right now it is decreasing, so it should be credited. Bank, it is an asset, it is increasing in the business, so it should be debited. Bad debt, it is an expense or loss and it is increasing in the business, so it should be debited. So the journal entry will be bank account debited with 10,000, bad debt account debited with 30,000, to Dinanath 40,000. This is again an item we have discussed. Bad debt written off or bad debt recovered, we will not charge GST. Now next transaction is withdrew from bank 60,000 for office use and 20,000 for personal use. Bank is involved, bank balance is involved, right? We are withdrawing from bank for office use as well as for personal use. For personal use, it is a drawings. So let us see what are the accounts are involved. Bank account involved, cash involved, and drawings. So bank balance is decreasing, it is an asset is decreasing, so it should be credited. Cash, that is an asset which we are withdrawing for the office purpose, so this is cash is increasing in the business, increase in asset should be debited. Drawings, decrease in capital, should be debited. So journal entry will be cash account debited with 60,000, drawings account debited with 20,000, to bank 80,000. Amount withdrew from bank for office use and personal use. Next. Received by check for a bad debt written off last year. So again, this is a transaction in which GST will not be charged. It is a bad debt recovered. Last year there was a bad debt which written off last year, that is 10,000. Now it is recovered from the debtor, so it is an income for the business. So two accounts are involved. We are receiving this amount through check, so bank is involved and bad debt recovered is involved. Bank is an asset, is it increasing in the business, so it should be debited. Bad debt recovered it is an income and it is increasing in the business, so it should be credited. So the journal entry will be bank account debited to bad debt recovered account, that is 10,000, being bad debt recovered. And the last transaction is sold goods costing rupees 60,000 to Kishore against check at a profit of 25% on cost, less 10% trade discount, and cash discount allowed 2% on sale price. So if you go through this transaction, this is check is mentioned, so the complete transaction is a cash transaction. We are selling goods and we are receiving payment from the customer, that is Kishore here. So I'm showing you calculations and explanation for this. Sold goods costing rupees 60,000 to Kishore against check at a profit of 25% on cost, less 10% trade discount, cash discount allowed 2% on selling price. So cost is 60,000 and in this 25% profit will be added, profit margin. 25% of the 60,000 is 15,000, so it should be added. Now the list price becomes 75,000. This 75,000 is a list price, or you can say invoice price. On this price we are offering to the Kishore. So at the time of offering these goods to the Kishore, we have also allowed trade discount, so we will deduct the trade discount 10%. 10% of the 75,000 is 7,500, so remaining balance is 67,500. This is selling price on which we are allowing to the Kishore. So on this selling price we also add the GST 6% CGST and 6% SGST, 4050, 4050. All these three items, sum total of these item is 75,600. This is the amount we are supposed to receive from Kishore, 75,600. On this amount, because full amount have been received from Kishore through check, so out of this on this amount we allow him the discount of 2%. That 2% will be calculated on selling price, that is 67,000, 67,500. 2% of the 67,500 is 1350. After deducting this from this 75,600, we have received check of rupees 74,250 from Kishore. So let us analyze the transaction. Sales is involved, bank is, because we are receiving payment through check, so bank is involved, output CGST and SGST is involved, discount allowed is involved. Sales, it is an income increasing in the business, so it should be credited. Bank, it is an asset, we are receiving payment, so bank balance is increasing. Increase in asset should be debited. Output CGST and SGST is a liability. Increase in liability should be credited. Discount allowed, it is an expenses. Increase in expenses should be debited. So finally the journal entry will be bank account debited 74,250, discount allowed account debited with 1350, to sales account 67,500, to output CGST account, to output SGST account 4,050 each. So being goods sold and payment received through check. And we also make total of the debit and credit side. Thank you, children. That's all for the day. I have also given one question from the practical you must solve in your class notes. Thank you. Have a nice day.